Hey, can you hear me?
And yeah, how's it going?
Yeah. Um, um, very interesting earnings call with Tesla. Um, Wait, where's everyone else? Oh, we just started the call?
Yeah, I think Mo said it was going to
Ew.
be half an hour late,
Okay.
so
Yeah, let's wait for Mo.
sure.
Um, hmm. Tons of thesis getting hit today. Not gonna lie. Think.
Good stuff. Are you sure?
Oh, yeah, I'm sure.
Nice.
Yeah, nice little. I probably need to ask Mo what to do on this position because the price target I sent out in the email is around 222. But I guess I need to update my model and incorporate all of that information to see whether I have a new price target. Um, oh, my Bloomberg just crashed. One sec. Um, yeah, so I'm thinking. Need some guidance on how to play this post-earning drift. Now, obviously we hit the target and I feel pretty good that, we're landing in the areas that, I laid out. So it's
Cybertruck
not,
did well.
yeah, like Cybertruck is, it's not really the center of the argument, I guess. Right now. It's doing okay. I mean, the cost is improving. They are, building the 4680 cylindrical. Oh, is it cylindrical? Oh no. Yeah, like the new battery in house. They got like a big ramp up in the battery production that brings the cost down, and we have raw material tailwind. That's like everyone already know that, right? So um, and it's not really surprising that the Cybertruck ramp and the new Model 3 ramp is going pretty well. Now, all the other ones is the one that's interesting. I think is that they are the factors I listed out in the earnings preview.
Nice.
Yeah, I'm just looking at the collateral damage. Lucid down 5%, Rivian down 1.16%. Because what we're playing with Lucid here is a little bit different. They will be affected by the ASP. The ASP sort of should impact everyone. Um, because today the headline was strong, but the bottom line kind of missed and missed big time.
What's your, is that, does that signal weakness in the economy?
Um, well, I mean, it it depends. The headline's strong. They're delivering more vehicles in US. That's like, good. Um, Gross margin is still okay. It was the operating expense that, further down the waterfall, that's where the problem is. They got restructuring cost 600 million. They got they're spending way more on the AI projects. That's killing the OpEx. Um, and that's the the real issue here with Tesla. It's a profit, not the revenue. Yeah, I'm wondering when they will give me the 10Q. Because the 8K doesn't really give me a lot. Kind of need a 10Q to complete my my model. Right now, it's just I built my revenue build, updated my income statement, but yeah, I need the rest. 10Q comes April 20. Yeah, it should come the same day. Yeah, probably like somewhere in the evening today. That's when they announced it last time. So
Announced what?
the 10Q. Oh, excuse me.
Right.
Yeah. Is Mo hopping on?
He said it'd be here around
Wait,
now.
is he saying 30 minutes late to the 30 minutes or 30 minutes late to 3 p.m.?
Uh,
Oh, I think
I
it's 3 p.m. That's why he said it. Yeah.
yeah, think so.
I
I
mean,
thought we
shall
were
we
gonna
just
start early.
yeah, shall we just kick it off with macro first and then, flow into the earning events if that works.
Yeah, go
Yeah.
for it.
Yeah, Fang. You wanna start with the macro side first? Existing home sales and manufacturing index and so on. I think you might be muted.
He's
Is he AFK?
doing something else.
Yeah, probably AFK.
Scratching his toes.
Um, well, maybe I can kick off with some read-throughs. So GM announced this Q2 earning this morning. I sent out a little note about it. Which is pretty interesting, right? They got good numbers released, but on the outlook front, they also raised. But I read the earnings call and I read their presentation. It's not good and rosy. Their dealer inventory is still too high, 66 days. The CDK system outage for the dealers didn't really help. So I mean that headwind will be gone. It's a one-time event, but they still need to get the dealer inventory down. Another big news is a Cruise. They had this kind of like a bubbly robo taxi design that they're pushing through with no pedals and no steering wheel. And today they said they paused it. I guess they're canceling it, and they're switching to the Chevy Bolt EV. And they say it's a regulatory reason. It will trigger a charge of 600 million headwind. So interesting take from Elon Musk. He mentioned it on the Tesla earnings call today. Said they couldn't do it because they're just not good enough. They couldn't pull it off. And I think it's okay from Elon Musk. Duh. Obviously, he'll say something like that. But when asked whether Tesla will have the same regulatory reason to not include the pedals and steering wheel, and he said like he's not worried about that at all. So that's a very, very interesting take. In the second half, for GM, they will have headwinds on ASP pricing, more seasonal marketing spend because they, legacy automakers release their cars in the second half of the year for the new model year, and because the EV mix is higher, therefore they will have a lower variable cost. And to my surprise, they did not, lower their 200 to 250,000 EV units guidance for the full year. I'm struggling to understand why. They only have like 75, something like that so far this year. So I think even though they're hitting the target, they'll be hitting at the low end of 200,000 in the second half, and that's given everything goes like very, very smoothly and there's no hiccups. Interesting thing on the Super Cruise deployment as well. We are in 2024, and they said they are still constrained by chip availability. So that's another worry, right? So you got these all brand new cars, there's so many brands and models underneath them, and they're like, okay, we're going to deploy the Super Cruise, but we're limited by chip. That doesn't look very well on the supply chain management. And lastly, I think the big story before the Google and Tesla earnings today was the China lagging behind other regions. So that and I'm not hearing any active plans to solve the problem in China. And some read-throughs from Porsche as well. So their production will be impacted by a flooding of one of their suppliers' production factory. It's a special aluminum alloys or aluminum if we're in US. And this is pretty big. So we know Porsche has been impacted by China. China dealership have high inventory, and then they are looking for rebates and so on. And now you're hit by this weeks of production shutdowns due to one of your suppliers. That's why the stock sold off, I think 5% to 6% earlier today in the European hours. And combine that with Volkswagen's headwind, it doesn't look really good for the traditional OEMs right now. And that's the read-throughs I have from GM and Porsche. And I think I don't know if you're watching it during European hour, but LVMH seems to having a bad day as well, citing the China weakness. So yeah, so that's the read-through generally when we start the day. And Lucid today announced that the software updating 2.3.0, so they are very active in communicating that on Twitter. They're signaling more updates in the weeks and months ahead. So that's actually very, very good news because their software has been on the lagging front versus other OEMs, and now Rivian's making big step forward. So does Tesla, and it's good to see that Lucid's, I would say the weakest link is not getting weaker. They're actually actively pushing out updates, so that's good. And good news from the production side as well. So their first production Gravity is fully painted now and dropped down to general assembly, and it's moving down the line. So it's great. We're in July. They say they're going to launch it, second half of 2024. And my initial estimation was they're gonna, release it or release it to the public later this year, towards the end of this year. But with the cars moving, and then like they're going to be doing the crash testing and so on. I think the probability of them having no delay is definitely increasing. Um, and the stock multiple contracted, but it's contracting the bit where you have this massive option driven move 2 weeks ago on that Friday, and so that's being squeezed out. However, I think today's Tesla move kind of contributing to further multiple contraction, given some operating headwind for all these EV companies, and I'm not sure how much read through or like how much I read into that. So probably if it tomorrow, I'm gonna assess the situation to see whether it's a good time to buy some dip. Yeah, so that's the update today. But let's talk about Tesla briefly. So before we go into the earning, we have a pretty weak trading day. The average volume is down, the option volume is down. Stocks trading, down like 1%, 2% throughout the day. And that's actually not too bad comparing to the other OEMs, the traditional automaker like GM, it's in line with Ford and Stellantis. Rivian trading better, but it's not as bad. It's not underperforming the sector. It's like performing roughly in line. That's the setup. We walked into the earnings, and obviously we had good top line, but that's kind of expected from the deliveries and production number. We have some, headwind in the restructuring, like I mentioned earlier. So that's also, it's known because when you cut employee, you'll have restructuring costs. And the regulatory credit, it's actually, doing like having a bigger portion that I initially expected. So that kind of like staying the earnings a little bit because people will view this as, yeah, like you have good top line, but regulatory credit is taking charge of a big chunk. So it's not really real growth. And the ASP problem, and then the pull forward for the Model 3 due to European tariff seems like likely to be a true story. So the management mentioned that due to the tariffs, they have to make some strategic reorganization around what kind of car ship to Europe from China. What kind of car to produce at Berlin. So they are actively figuring out a solution, which I think will impact Q3. But Q4, if they are swift and they actually manage to go around the tariffs, then yeah, okay. So then less impact on Q4, but on Q3, I definitely see an impact. On the operating expenses, I think this is something we can extrapolate to the next 12 months because the increased spending on AI. So that's not something that's one-off. That will be continuing headwind into the OpEx expenses, which is going to hurt EBITDA. So if you're pricing Tesla on EBITDA, then that's something to watch for. I'm still pricing on sales. So when I move over to EBITDA as well, so that's going to have some impact. Let me see what else in my notes. Oh yes, the factories. So if you remember yesterday, we were talking about a kind of like a bull case for Tesla, which is if we have a pickup in demand, then we're gonna increase our capacity utilization. Therefore, it's possible we open a Giga Mexico, and that event or like the catalyst for that is according to Elon, solely depending on who's winning the election. So Trump saying, we're gonna have tariffs on these cars made in Mexico because the Chinese are trying to take advantage of Mexico and selling these cars to US. So that Giga Mexico is definitely on pause, and their strategy is to maximize the current capacity, which is, I would say, good because they're definitely spending tons of capex on AI, and if they spend more capex on factories, then it's gonna get pretty out of control, especially with the bottom line hurting a lot in this earning. On the product side, interestingly, we definitely get more visibility on the timelines for semi, timeline for roaster. Take it with a grain of salt, but those are the update, and then these are the numbers we'll be playing with. On the new vehicle, they didn't say what new vehicle. They're putting ahead to first half of 2025. It could be trims of Model 3 or Model Y. I'm a little bit more skeptical on whether it will be the Model 2, but I'm not taking that off the table because it could be released simultaneously alongside the Robotaxi event, which is October 10th right now. So yeah, like overall, tons of hits on our thesis. It is, in my key scenarios, ABC, I would say it's between B and C, which is exactly where we landed. And we'll I'm gonna do more study tonight to see like how much we extrapolate these performances into the future. I know the energy is gonna be lumpy, but yeah, the overall feeling is you'll have more cost optimization since the AI projects are taking more of the budget or taking more out of the revenue. The auto business is flatlining because I think the growth in the organic or secular the organic growth is going to be offset by this tariff, European tariff, and therefore the US tariff as well. But the Robotaxi event is still alive, and the progress on the FSD is there, but I'm looking to see more evidence of them pulling it off. And on the regulatory side, I think Elon mentioned that if you can show you have this unsupervised FSD and the mortality rate overall is lower than human driving, then it will be morally possible for regulator to approve it. So they're working on the generalized solution that will work for everything, not just specialized to one state or one city. So that's still a show me story. I think anyone who's like, you can price it, right? You can price it 2027, 2028, no problem. But if you're trying to price it into the next 12 months, I think it's just, I'll fade it. There's no way they'll have it in the next 12 months. So yeah, so that's just the overall wrap up on Tesla. I think I went on a big row on that. So any questions or anything you guys interested in or like could be relatable to your coverages? Yeah, now after hours down 10%. So 226, $4 away from my price target.
Wait, wasn't your like price target 220?
Yeah, like I did like
That's kind of close then.
yeah, like 222 is my like
Oh.
calculated Excel, that I put out in my note today. So 222 is the actual target, which is priced on 2027 earnings, 4.5 times EV sales. So yeah, it's getting awfully close. So we were trading 250 today down to 226 in the after hours. And yeah, so that's why I probably need some help on post earnings drift. And whether I should take profit first and analyze afterwards, like analyze the extrapolation, or should I do the analysis first and then figure out in the pre-trading tomorrow or like when the market open tomorrow? I'm not pricing this on next 12-month basis. I'm pricing this on 2027. So on the next 12 month, it's going to be even weaker. Yeah.
Yeah, I mean that's why the like trade I gave is like short
Yeah, I
strike is
actually love the
struck
trade. Yeah.
short strike struck at like 210.
Mm-hmm.
Yeah, yesterday like it traded at like 3.75. Yeah,
What's it trading now?
at close it's like up $1 per fly. So
Uh,
I think it will be able to like 3x at least.
yeah.
So let's see. I mean,
Do you have the payoff graph?
yes. Let me
Yeah,
see.
you can see where the strike lands.
No, but I mean like that's for Friday.
Wait,
I mean tomorrow's
so sorry. I actually didn't caught this, but on your trade idea, why are you putting 230 on August 2nd though?
Oh, I mean it's just I think like there's like a I mean because like your price target is at like 220-ish. I mean
Yeah.
is I just want to have something that is kind of like you can still able you will still be able to take advantage of the post earning drifts.
Oh.
Because I think the price will just like trade like to the left to like 230, and once it went into like
Oh.
the in the money, I mean, be like too much like I mean the major exposure will be mainly just like delta, you know. So it's just like you are having a short position. All right.
Right.
Yeah, I mean,
Okay.
let's see. Let's say like just by Friday, like don't get like a lot of help from earnings, and this like post earning drift just keep going.
Mm-hmm.
Uh, let's say like by Friday, like the 210 strike and the 200 strike, they just like they might be still like out of the money, so like they expire, but the what remains is like a 230 put. And maybe like the spot is trading at like 215, and then that's kind of like you are having like a just like a short delta position basically where you don't have
Mm.
like any other like exposure.
Okay.
And also
I
that
hear you. Yeah.
yeah, that's just like for one thing like you don't want to like have everything like in the earnings week because like the vol is like bloated.
Because I see. So because you're buying that, um, buying the wings, and
Yes.
the earnings week will be a little bit too expensive on the vol
Yes.
side. Okay,
Yes.
okay.
Yeah, like
That's the next level play. Wow. Okay.
yeah, I mean
Um.
I thought like you guys
Yeah.
I mean
I'm like
because
I can price stuff. Still a very noob at this. So.
no, I mean just like if you have like a price target, I mean I can just
Mm.
not like things like this, but it really depends
Yeah.
on like if you're gonna trade it or not. But I think this gonna like yeah, I mean this gonna like earn nicely tomorrow
Mm.
when it's like
So
trading at like
yeah.
210, 220. I think
So
it's gonna like
do you have this on?
no, I don't.
Oh, okay.
I
Yeah,
have
no,
no money in my trading account, so
I was yeah, so I saw this, but I had this short already on, and
yeah.
um I mean, this is my like first like proper earnings on these 3 coverages, so I'm just
Yeah.
getting a taste of because the first time, in Q1, still learning, learning the ropes, but this one, the just getting better and better at the sell side
Yeah,
scrubs
I
and
think like
my
the
views.
yeah, yeah, I think
So
depending
yeah,
on
maybe
like
next time. Maybe next time
yeah,
I'll.
depending on like I don't know, like I think just for us, I think it's okay. I'm not sure, but like I think for like a long short mandate, probably it's you have to play the underlying. Like this
No,
is
I think you
just
can. No, long short, I think you can still play option.
okay. Yeah, but I
The
mean
long,
the
long short is just a view, right? You
yeah, but I mean
whatever
the
instrument
like
doesn't
the
matter.
expiries I'm choosing is kind of like
Ah, okay.
it's very tactical. It's
But I
it's
like that thinking. I like that thinking. It
it's
makes sense.
not about like what happens in 3 months. It's just like right after the earnings, you're gonna
Yeah,
like you're just gonna like either just like take profit or just like get out. I mean,
yeah.
there's like not really too much like I mean, usually like valuation won't manifest themselves in a week or two. So I mean, this
Hmm.
is mainly just like shorting earnings fall. But when you have like a price target, that makes like things easier.
Oh yeah. Oh yeah, totally.
Uh,
And actually, speaking of that, um, the 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 implied move of the earnings today is like 8%.
right.
I think, yeah, last time I checked this morning, I wasn't checking it frequently. But today, right now, we're moving. Oh, it's like 225 now. Okay,
Yeah.
10.5%. Yeah, it's moving closer and closer to my price target, which is like,
Yeah.
yeah.
I mean, it's just like
No, I'm gonna stop looking at the price, but
yeah, right.
that's just what I'm saying is, um, it's the vol of this event is bigger than people expected. And I can see on the light positioning today, just throughout the trading day. Yeah, and you know, should be good bit of vol pumped into the pumping into the options.
Yeah, I mean, probably like the bets.
Hmm.
Probably like yesterday, there's like a lot of bets. Today,
Um,
I'm not sure.
I mean, like it was still like it was trading in this range, right, for a while. Um, so I like the multiple didn't expand, the fundamentals still intact, and in my view, um, the after the re-rating event, there wasn't really any more stories to it. Um, and now it's trading down to this level. Let me see.
Yeah, I mean,
It's
I wouldn't.
almost. Should I say it's almost where that?
Yeah, I mean, I wouldn't be
Mm,
surprised there will be like a further.
yeah, we're almost trading. No, we're almost trading back to where we were before the delivery release. Or like right after the delivery release. So I think that could make sense. The rebalancing story on like the Uber bear side, on the sell side, actually kind of makes sense, to me on the long only side. So if it's truly a technical gamma squeeze plus rebalancing on the long only side, then yeah, like when that's done, that's done. There's no further buying pressure. Um, so
Yeah, I mean,
we'll that was my argument why the multiple stick there despite we have like a pretty volatile week last week. It was up and down like a roller coaster, right? So but yeah, I'll be doing more research tonight. Oh wait, what happened with Google, by the way? I think Asia is opening pretty weak in Australia.
I'm not
I
sure like what's happening. I mean, usually like, I mean, I used to like trade around the clock. So like
for the
I
legend.
th no. I mean, it's just like
I want to do that too.
it's like it's more of like a it's more of an addiction rather than like uh
Oh, I mean,
Like,
that's
but I
the reason
mean,
why
but
we're
I
here,
mean,
baby.
but
Yeah.
I mean, like, usually
Oh,
like
wow.
the
Okay.
Asia hours, like they will follow what's happening in US.
Yeah, yeah.
So yeah, I think it's just like a continuation of like the.
So Google actually dropped off.
I think it's just overall tech
It
sell-off, but yeah.
well, I mean, they didn't complete the acquisition with Wiz, right? So that was before the earnings. I was focused on Tesla too much there, sorry, I didn't pay
No,
attention to.
it's okay because I don't even like pay attention.
Wait, Barnaby and G, do you guys have any insights on Google?
I mean, if James is here, then
No, I'm not sure.
fine. No,
Hmm.
I'm not following that.
No, me neither.
I think they went up like right after the earnings, but like then they
Yeah,
fell
and
off.
then
I
and then
think it's
yeah,
just
fell
like
off during the call.
okay, then there must be something. Probably Mo has something, but
Yeah, probably Mo definitely has something. I mean, he's not even on this call right now, so is he onto something?
uh, but anyway,
I mean, I'll actually take. Let me go on research. Is it- I
I'm
mean,
just like not quite surprised because I think like overall like the earnings will just like disappoint.
I'm gonna go on the Alpha Sense and see any mentioning of Waymo, because
Like
sooner or later that will be in my coverage. Like just the Waymo bit.
I think you already mentioned like from like a few days ago, like companies will like post
Ooh.
like okay earnings and like price will still drop. I mean that's
Okay,
kind of
so they did mention Waymo. Okay.
I see.
Okay, let me see. In other bets, I'm really pleased with the progress Waymo is making. Real leader in the space, getting great reviews. Okay, 2 million trips to date, 20 million fully autonomous miles, 50,000 weekly paid public rides. So that's times four. Wait, four. No, times 12. How many is that? So 50 times 12. So that's 600,000 weekly rides. What am I pricing to my Tesla? Interesting. Okay. I'm doing millions. Oh wait, so right. 15 million. Okay, yeah. I don't think my Tesla's robotaxi is way too crazy. But yeah, 20 million miles. Hmm.
It's crazy like how these trading ideas just like hits.
20 million. Yeah, my first year was like 75 million miles. Yeah, so definitely turn it down a little bit more.
Anyway, just when you're just like looking at stuff, I'm just gonna briefly go over because like still we're
Oh
kind of
yeah, definitely. Sure.
yeah, like
Okay.
the earnings are still like the main character. I think
Mm-hmm.
macro is kind of like more of a supporting role this week, but uh, existing home sales disappoints. I mean, it just like matches like the over like growth slowing ceases. Like
Right.
that's like yeah. I mean, I was like when you mentioned like there's like a manufacturing thing, I was like okay, there's like Richmond survey. I compared that to like the Philly Fest survey and
Mm-hmm.
all like they kind of like contradict with each other. So yeah, I wouldn't like take too much signal from that for now because like we do have the GDP. Let me see. Tomorrow we have like PMI flash print and like Thursday we have GDP.
Yeah.
Like Friday we have PCE. Like I think those will
Mm-hmm.
like give like a clear picture.
Do
Like
you have a dashboard on that? That we can.
I don't really have it right now.
Okay. Okay.
Yeah, like recently I'm just like scraping everything from BCA. I think our trial
Cool.
is like near to an end. I mean, I'm really interested in their like geo macro stuff.
Uh-huh.
I would like even like love to like pay a portion of it just to have it. But let's see if
Uh,
like anyone's interested. Like we can kind of like
but-
amortize the cost if like anyone wants it.
and let me know if you like put together like if you want to put together like a macro dashboard where we can track these. Like track our
Yeah,
view versus the
yeah. I
street and
mean,
consensus.
yeah. Let me see. I mean, yeah, that's kind of like on my to-do list, but yeah, I mean, recently just like trying to. I mean, I'm trying just to get like a better understanding of like the
Cool.
logic between like all these like macro factors like
Yeah.
growth, inflation, how it like relates to like debt, like
Mm-hmm.
consumption, also like how labor and housing factor into all of these. I mean, it's just like it's like tracking things, but I don't really understand like which one goes to which.
Mm-hmm.
Or like when like one factor is gonna lead to another one, like yeah, it's just like a causal effects, you know.
Mm-hmm.
But anyway, like just like I'm doing like some like work to like fix my fundamental understanding, but yeah, I will be like starting to like code and love the dashboards. Yeah.
Yeah. Okay.
But yeah, like the existing home sales, I mean, these disappointed, and I think one thing that kind of like caught my eye is like the UPS earning kind of like bombed.
Mm.
They missed
Yes.
by quite a lot. I mean, that's kind of like I mean, that still fits like the growth slowdown. Like
Are you
a
using that
slower.
as a like a
No, I mean,
leading
just like
indicator or something?
no, it's just not an indicator. It's just like I mean, it's just like a heuristic, right? I mean, like these
Mm.
like logistic like company, like if they're like having trouble getting like more, I mean, if their earnings kind of bad, that means like people are probably like not buying that many stuff, or you really require like a logistic to like finally get there, get the thing you bought like in your hand. I mean, that's kind of like just
You opt for the
yes,
slow
yeah,
shipping.
yeah, just like a small piece of like
Yeah.
puzzle, but I mean that's kind of like fit the narrative of like a
Hmm.
growth slowdown. I mean, rates are
Yeah.
still like quiet. I think like I don't even think like PCE will like matter that much. I think just probably like we're just waiting for Fed next week and also like the NFP figure.
Uh,
Uh,
Wait, what's the reason why do you think PCE doesn't matter or like doesn't matter as much?
it's like the this inflation story is still there, right?
Oh, I didn't realize Mosen. Oh, hello.
Oh, no. Hello. Yeah, I think it's just
Hey
Mm.
guys, it's a little noisy here, so I'm mainly going to be on mute. I'm listening though.
Okay. Okay.
okay,
Okay.
all right.
Cool. Um. So
Yeah, I mean, just the disinflation story is still like intact. I mean, we don't really get
right.
like a lot.
So
Yeah,
so
I
you're
mean,
saying it's priced in.
yeah, I would say that because like
Okay.
I've been watching like the Fed watch like the cutting probability, and it has
Hmm.
been like hovering like at least for like December like this year like it's still hovering around like 2.5 cuts like it's over like a few days like the rate space is kind of like quiet. Also, like the Fed funds here is like kind of quiet.
Hmm.
We're also like in like a blackout period from the Fed speakers. Like no one's
Hmm.
actually like saying anything
Yep. Okay.
that's actually
Hey,
like
yeah, Fang.
yes.
Can you pull up the SOFR curve on Refinitiv?
Yeah. Let me see. Let me see. Let me see if like this curve app can actually like run the because they do have like a lot of chains. Let's see.
I do have on the dollar SOFR on Bloomberg, but yeah, you can do the Refinitiv.
Yeah, Refinitiv.
So I guess my question is like, look at what's priced into July. Where's SOFR at the July, term 2025? And what's the implied amount of
2025,
cuts, right? What's the implied, yeah, because now we're, like this is, we only have another like 3 meetings, right? I mean, that are potentially live. So in that case, like we want to now look at, NTM. We should always be paying attention to NTM, but that's just going to be a
it's
key
just
thing.
like nearest 12 months, right? So
Right.
let's see. We'll have like the numeric.
I see 4 spot A1. Do you see that? 12 month.
Invalid time series West. Okay. I'll just put out like a. Let's see.
You could just look
Yeah.
up the contract, right? So like,
Yeah, like September. You mean like the July 25? It's like I don't think the
yeah.
anyway, like the June 25 is right now 4.04. So it's like 95.96. September 25 is like 96.16. So that's 3.84. It's the yield. So that's almost like 150 pips of. Yeah.
So you're saying there's about 150 basis points of easing that's priced in until July next year or June of next year?
Yeah, let me show like the screen. I mean, I do only have the like right here. Like June 25 is like here. It's like 4.0. So that's about like 150 pips. Or 25 actually. 125. It's like 5 cuts. And in September there's it's like 150, yeah.
Any does that match on Bloomberg?
What's the price you see? 96.16.
Yeah, 96.16.
I see like 95, 96. So
Yeah,
very
that's
close.
no, that's June, and 96.16 is September.
Oh, you're looking
only-
at September. Sorry. Yeah. Okay.
Yeah, so like just like between
Yeah.
these two. Yeah.
Oh, 1 sec. 96.16. Yeah. So yield is 3 spot 84. Right.
Yeah.
Okay. So 5 spot. So 6 cuts around.
Yeah.
Yeah. Go. Yeah.
Okay, cool. So, if you think about what's being priced in, right? So
Yeah.
about 150 basis points of cuts, into next year, till the first half of next year. That is pretty much communicating like a higher for longer regime.
Because you're looking at real rates, right?
Right.
Okay.
But even at the nominal, right? Like,
Uh-huh.
That's a higher for longer regime because you're talking about a Fed funds rate above 4%.
Uh-huh.
Or say around 4%,
Around
next year.
4. Yeah.
Right.
Yeah.
And then by the end of next year, you get to, I think, what, 3.5?
Yeah, I mean, till September that's like 3.8. Like it's like 3.
What about December?
December. Let's see. December is 96.29, so it's like, yeah, it's still around like 3 3/4.
371.
Yeah, it's 3.75.
And then can we see June 26th?
Yeah, June 26th is like 96.42, so it's like about like 3.5.
Yeah. So you're talking about 200 basis points of cuts that's priced in right now. So, I think on the rates market,
Yep.
that is telling us that, in the rate space, that's positioned for, I think, pretty well for what the Fed is going to communicate at the FOMC meeting, which is like, hey, the path of disinflation it's moving in the right direction, but it's still, there's no reason for us to cut dramatically. And so what this means is that there's no real trade for us in the rate side.
Yeah.
But what we can look at is, okay, so we may have, so like there's no easy trade, let's put it that way, right? Because there's two types of trades, right? There's an easy trade, and an easy trade is when the market gets really overextended, expecting an outcome where there's like no visibility or very limited visibility on. So like if the market was pricing in, really significant chance of a hike or a cut, and there really shouldn't have been, right? That would have been a case of like a quote unquote easy trade in the sense that we would just be fading kind of like an extreme move. In the case where the market is pretty much pricing in the path of like data, like of the information. Now what it means is any trade that we want to make is going to be based upon our view of the like underlying, right? So we're going to have like a beta view. It's not necessarily an alpha view though, if that makes sense. So our beta view might still be that, okay, well, we think that the path of data in the second, or like at the end of this year is going to be softer. And in that environment, the Fed is going to have to cut more. But that's risk that we have to take, right? That's like a risk view. We could be wrong on that one. And we're making a bet about information that hasn't shown up yet, right? So it's ex ante sort of a thing. So when we do a trade on like an ex ante basis, we only want to make that trade if it's cheap. Now, because the market is roughly pricing where information is, we're just like slightly cheap to trade those views, but it's not really showing a really good discount. So we'll need to see, what the path of data looks like over, what the market response to data points are over the next couple of weeks and into like FOMC, and then we'll have an idea as to what's going to happen. But if you go back to like our thesis on what we think is actually the upcoming catalysts, we pretty much have this view that, yeah, it's going to be the August, CQ. We're going to have Jackson Hole response to that data, and then a September FOMC, right? So a slightly hawkish lean in July, right? And then data points in August are really going to be the things that either prove or disprove our thesis.
Right.
What would you say will be a very aggressive scenario on the cutting?
Like what would drive it, or?
What will be like the SOFR curve if like you're saying, oh, this is actually according to the current market view is very, very aggressive?
Okay, well, given where we are right now, okay?
Yeah.
So think about like how the data has been, right? What is the data so far that the Fed has? One, on the inflation side, that the data has been coming in better, right? We're getting like decent inflation prints. But two, on the labor side, the jobs market seems like it's continuing in its trajectory. Okay. So in that environment, should the Fed communicate aggressive easing?
No, I think you just like
no.
They just
Right, exactly.
stay like balanced, right?
Exactly, right? It should start making some small cuts, but it shouldn't like scare everyone. There's no need for some major cut, right?
Yeah.
So I think that's what the Fed is going to communicate, right? Like there's no reason for the Fed to go against that. The only reason why the Fed would go against that would be if the Fed says, you know what, we know that there's going to be this like revision update to the jobs data for 2023. That's going to show that jobs growth has been weaker than we expected. And in that environment, the economy, like our star, right, is lower than we have been expecting it to be. And in that scenario, where interest rates are today is like way too high. So that would be the environment. But then that would be the Fed taking on risk. And I said that they could have made a case for that. I think that the Fed leans on like that might be the right decision. But because in the June step, they went hawkish, there's just no way that they're going to go like they're going to try to do a back and forth right after, right? It's going to make them look so bad, right? So they're just going to, you know, they're going to try to be patient, right? And that is something that we think is, or that I think is a risk, right? If they're too patient, then by the time they do actually start seriously cutting, it'll be too late. Right. So we're kind of in that narrow window of time where, you know, the Fed is, you know, it's kind of a messy, right? And that's why you have these, I don't want to call them opportunities to make mistakes. That's pretty much what it is. Because otherwise you should expect that, like, people don't you know, like, if you're smart, you're often not going to make mistakes, right? Like if you have a clear set of instructions, you're typically going to follow it. The only times, right, you might mess up is if there's some exogenous factor, you know, if there's something that's hard to read. So that's and if there's like a behavioral issue, right? So these two dynamics are at play where we have a behavioral issue in that the Fed kind of reneged on their patience earlier in the year. That's number one. That's their behavioral issue. And then number two, it is hard to read because you have these revision impacts to non-farm payroll. Okay, so that's like the setup for this. And so what would be extreme in the markets is if the markets were like, oh, like if say PCE comes in even cooler than expected. Well, the thing about this is it's not going to matter because it's coming out on the day of the FOMC, right? But say, for example, we had a data point like when CPI came out. CPI, right, missed, right? And so that would have been an opportunity for the rates market to go like more extreme and to like price in a bunch more easing, but it didn't, right? Because like the market was, you know, smart about it, right? And that's what we should expect. We should expect that most of the time the market is pretty smart and, you know, gets the right thing. Sometimes it's wrong though, right? And that the market is always trying to optimize for like the best informational view. So, you know, it's always going to be like, you know, the informational view is the 50 delta call. Like that's how you should see it. It's an at the money position. And like risk views should be like a 20 delta or a 10 delta. Like that's what makes sense. So in that sense, that's like how the Fed is positioned and how the market is positioned for that. And so in that case, like a 20 delta position, you know, is a $20 position. Now, in our case, I might say, well, you know, I think that actually, you know, the Fed is going to ease more, you know, later this year because the data is going to look more weaker, right? And in that case, my argument is that what's trading right now at a 20 delta should really be trading at like a 40 delta. And that would be like an expectations gap in the market, and that would be something that I would want to trade against, right? But because we're before the July event, I'm hesitant to put that trade on, like, because right now it is trading at a 20 delta. If that was trading at a 10 delta right now or a 5 delta, then maybe I would go and make the trade because I would say even at the current level of information, I would expect that it would be at least at the 20 delta. This goes back to like the fair value concept that we talk about, right? Where it's like, how are probabilities shifting? There is a probabilistic outcome that I believe is going to happen, but given the set of information now, where should that trade from a probabilistic standpoint, right? And that's really the thing that, you know, that we want to trade. So that is where the fair values are and probabilities. That's what's going to tell us that there's like a trade that we can make that's like from a rich or cheap standpoint. But, you know, ultimately it's like, what's our, you know, beta view? And that might be that, yeah, I would expect that there will be more cuts in a later part of this year, given that revision to, you know, last year's employment data means that the R star, you know, changes, the positive shifts in R star, I think we're going to have to be revised lower. And that's a dynamic that, yeah, I don't think that the market is prepared for because the SOFR curve into the future is only showing it's pricing in a higher for longer regime. So this is like the setup, but the market is not giving me like a really like juicy trade yet. You know, it's just, it's pricing it very, you know, at a very good like fair value, you know, and so in that case, you know, I gotta wait and hope that there's going to be some event that distracts the market. So we'll see how that pans out.
All
Yeah,
right,
makes sense.
just looking at this chain, like the difference between the 24 December to like 26 June is like only 100 pips. Isn't this like feel like a little bit lower? Like within like this period of time, we're only cutting like 100 pips. It just seems like a little bit lower. If our like macro view was kind of like positioned for like a slowdown. Ah, okay. Hello, hello, hello.
Hey,
He said be out about 5 minutes.
Yeah, is my mic working?
Yes.
Oh, okay.
I think he's just
All right. I mean,
yeah, awful.
we can
Yeah.
come back to this like when he
Yeah.
comes back. But I mean,
Sure,
like
yeah.
just like a few other like observation.
Sure.
Like vol is kind of like vol has maintained its level because I was watching my two long vol positions. I mean, I checked the open today and was like, gosh, like those long vol positions is gonna get wrecked. But doesn't seem to be like that. I mean, yesterday it got wrecked because like the Russell position has the highest Vega when it's like at like 2200. So like any vol dampening will like hurt that position by quite a lot. But today it seems like the vol was able to maintain its level because those long vol positions didn't like really lose a lot of like value. So yeah, I think like today, I think market is still like well positioned, like the evolve. We didn't like get the evolve dampening, like after like I don't know, like because like the morning like open seems like everything is fine, but then it's like vol is still like elevated. So what else? I think like just like on the edge geopolitical side, I mean, I mean. The Palestinian has like reached like agreement in China. So like the Hamas and like Fatah, like the two major like party in like Palestine, and like there's like 12 more others. Like everyone has agreed to like form like a unified government to just like make sure there's like someone to take on the construction of like the post Gaza like conflict. So I think that's kind of like I think the just like the overall it seems just like the
Like
war
de-risking?
war risk premium is kind of like deflating like
Okay.
like yeah, it's funny like how everything starts to kind of like working like after like Biden announces its like exit. But yeah, like right now, like the Ukrainian Foreign Minister Kuleba is gonna stay there for like 4 days. So I mean that's kind of like interesting. I thought he's gonna just stay for like 1 or 2 days, but like 4 days. So there's like something to discuss. And like yesterday, like the Palestinians has also like reached an agreement just to like it's more like forget about like the internal conflict. We need to kind of like make sure like to just like fight against Israel for now and probably like work out like their inner difference like later. So like I think that's kind of like I mean, things are just like getting towards to like a more peaceful state. So yeah, we'll see. I mean, if anything, like that means like the geopolitical like risk premium is like a little bit lower than before, but it still like needs to be seen like if anything can be reached, or like a peace deal can be reached. Yeah, I mean, there's like a lot of speculations, and I will not kind of like go over the speculation for a lot, but yeah, I mean, just like we might be able to get like a temporary peace around the world. I mean, that's a good thing. So yeah, I mean, just like let's wait for Mo to come back. There's probably like nothing more from me. I'm just like fix my own understanding about macro and like starting to build like dashboards. So yeah.
All right, I think I'm back.
All right.
Cool. Yeah, let's just go on, Barnaby and Gene. Any updates that you guys want to share?
No major updates from me other than I was job hunting and encountered my second cousin, who's like a director at a fund.
That's good.
Nice. What firm is he at again?
Maya Capital,
Oh, cool. What kind of strategy do they run?
long only, quality value, long term.
Okay,
Investing.
that's cool.
Yeah,
How's
pretty
he-
interesting.
Has he been there for most of his career, or like where was he at?
Yeah, so he's been there since 2015, and he did long short before that, apparently. So
Oh, cool. Where at? If you don't mind me asking.
OB, OBEY.
Oh, okay.
Have you heard of it?
OB or Ode?
Oh, O'Day, that's right. Yeah, O'Day, I think it was. O'Day.
Oh my God! Wow. Yeah, no. Ode is probably one of the most notorious British long short equity and global macro funds out there.
Interesting.
You've not heard of them?
No, I haven't.
Crispin Ode. This guy's Mr. Brexit. He like funded Brexit.
Oh, wow.
He was like the British George Soros.
Whoa.
Yeah, I believe Hugh Hendry, who's another global macro like PM that I know, used to work for him, and they couldn't stand each other. But the stories that I've heard are kind of funny. But apparently it's it's still one of the. Well, they kind of had a little bit of an implosion a few years ago, but it sounds like they righted the ship and are still back to it. But yeah, they're pretty well known. It's like a good shop to work at. It would be the equivalent of someone working at like 0.72 or SAC.
Interesting. Nice. I need to look into it then because it's new to me.
Yeah. Nice. Very cool though.
Yeah, crazy small world.
So have you guys been chatting about markets?
Yeah, a little bit. I've been sending him a lot of questions, and he's been giving me some advice on the application.
That's awesome. That's very cool.
Yeah. It's like 200 applicants probably, so
Right.
yeah, I'm gonna get it.
Well, always helps to have someone on the inside, right?
Yeah, definitely. And totally different strategy. He mentioned, I asked him what his edge was. He says time arbitrage. And I looked into it. I didn't really see much that explained it. Do you have an opinion on that?
What did he trade? What does he trade? Equities or?
Yes, equities.
Okay, so what he was talking about is the slow diffusion of information.
Okay, fine. Yeah.
That's a funny way of putting it, though. Time arbitrage.
Well, it's got a page on Wikipedia, on Investopedia.
How is it defined there?
Pretty loosely. I don't understand it because I mean, if you assume that an asset is the future value of the sum of is the present value of the sum of future cash flows, then it doesn't make sense to me.
What do you mean? But what if other people don't know that the future cash flows is going to be like $10 more?
Well, then isn't that surely that's not a matter of time, right? Because if you're applying it to a long-term investment, then you're not seeking like a catalyst like that.
So I think what happens is, and like the way you see it is, if you're a long-term investor, you want to be in a name for like 10 or 15 years, you have to have a view about what you think is going to happen over those 10 or 15 years, right? And the way that you get paid is that the market slowly finds out and slowly converges to your view.
Right.
So if the information, like if you arrive at your view with existing available information, then that you're taking advantage of the slow diffusion of information. So I'll give you an example, okay? Like, say you have Brexit. If you know that before Brexit, there's going to be this massive impact to economic activity in the UK and through continental Europe, and you then build a scenario where you say, okay, well, the impact of UK falling or leaving, the European Union is that, financial, services or, financial companies get impacted dramatically. And you see that currently, financial market or like, financial companies are expected to grow at a growth rate of say like 10% over the next decade. But in reality, that their revenues are going to be half of what they are today. And you position for that, then you're just waiting for the outcome to happen. And over that, it'll take 10 or 15 years for the market to kind of converge to your, view, right? And there's going to be a lot of catalysts on the way that's going to confirm whether your thesis is tracking or not. So that's how like a long-term investor will approach it. You really have to try to understand like what's like the bigger, story, the bigger backdrop.
Interesting. What would be an example of that?
Well, the financial firm one is a good example. Another example is if you have a view that, about Amazon, right? So Amazon has become a very successful e-commerce company. And you understand that there's a trend going from brick and mortar businesses to e-commerce. And you have a view that globally, the penetration rate of e-commerce should be roughly about, say, 50%. But today, maybe e-commerce is only about 25%. So there's another, e-commerce will double on a, percentage basis to commerce, or, it's a percentage of total commerce over the next, say, and you might, run an estimate, you might say over the next, like, say, 10 or 15 years. And then what you could do is you could say, well, let me go find companies and countries that are running this, that are like on this, thesis. And so you would invest in companies like, say, Mercado Libre, or, in India, there's a few companies that are also, doing e-commerce, right? Any company that's, that's like tracking to that, you'd want to invest in. And you're generally going to make like industry-wide bets. So that means that you might invest in like the whole basket of companies that are trying to do that. And you might go like maybe long those names, and you might go short, your traditional brick and mortar companies. So that's how you might position it. If you're long only, then you would just invest across the industry. But if you were long short, maybe you would go like, intra-sector or, across the thematic, characteristic there. So that's an example of how you might approach that.
Cool. Yeah, interesting. It's nice to get a totally different perspective.
Okay, let's move on to Gene.
Hey everyone. No major updates. I finally pulled together all my notes in one place and posted them in the OneNote. I'll probably go back over them just to tighten them up a little bit more, and then start a earnings preview since Paycom has earnings next week.
Very exciting.
Nice. Any thoughts on what you think is like on how you lean into earnings?
I have to find the right context, but I'm actually leaning to Q2 being beat compared to what everyone's expecting. The June tech conference, and I may be reading in between the lines a little too much, but the CEO kind of used some words that kind of to me seem like they may be doing better this quarter compared to last year's second quarter, based on the two AI releases. So it may be quarter year over year beat, but may still be weaker than Q1. I just got to find the right context to frame that.
Nice, yeah. That's cool. I think Paycom is one of the companies that was trying to like push this AI thesis. So we'll see how it pans out.
Mm-hmm. And then,
Nice.
I guess one of the things that's leading me there is, and I'm not sure how to read fully, but they say they have a new office coming online, and I guess being built and come online. So I don't know how long that translates to impacting the bottom line for them. But this will be their fifth office, so assuming more sales, more production with some capex. But they've been counting the capex hit to that building for some time now, and it should come off the books going into 2025.
Are they buying the building or are they just leasing it?
So from the way I read it, I think they're buying the building, and if I understand the strategy, each of their buildings also host some of their servers. I have to double check that. I know they have three buildings where they host servers. I don't know if this is a new one or if this is just offices for sales team. That I'm not
Oh,
quite
okay,
sure
interesting.
on.
So it's like a data center almost.
Yeah, yeah, because I know they for sure have three that are data centers. I don't know if this is a new fourth data center or just a fifth office or some combo of two. I haven't really seen anything clear on that. They just keep saying it's their fifth office, but they don't differentiate if it's sales or data or both in anything that they've put out. Oh, we lost Mo again.
Oh, yikes. Yeah.
Oh, he messaged back next. But
Yep.
anyways,
Yeah.
yeah, I'm gonna keep on working on my earnings preview tonight. That's pretty much it. I am gonna drop off. I gotta go get the young lady ready for bed, so I'm gonna hop off
Yes.
tonight, guys.
Okay. Yeah, cool.
All right, you
Thank you.
guys
Thank you for
have a
that update.
good
Looking
one.
forward to it. Yep. Yep. Thank you, Gene. Um, let's wait for Mo to come back because I do want to discuss Google. I think Yafeng mentioned that too. You know, our view, not necessarily our view, but like it's going into the earnings when we have a good top line, um, but what if there's some ideal reason? But if there's no ideal reason, then if the stock still sell off, is there any caution or like any sources for worry? I guess yeah. On the Tesla side, because I know the ideal, so I know what's driven the move. But on the Google, probably need Mo to share some of his views.
I really want to get into CrowdStrike, but I'm gonna have to drop soon.
Oh yes, and CrowdStrike. Yeah, we can do the CrowdStrike first, I guess. I think it helps with your coverage.
Yeah, it is, but I haven't really looked into it. I've been trying to finish my schoolwork.
Okay.
I mean,
let
my
me just
my
ask
take
you.
basically is that it doesn't impact the quality of the product that CrowdStrike has. They still have the best platform by quite a large margin, and they're going to get sued. I'm guessing a lot. They're going to lose a lot of cash short term. But to what extent does that affect their growth?
I think it's to
I'm not
what
sure.
extent do they impact the how do I call it, the renewal in Q4? I would love to hear your thoughts on that. If it will impact companies' decision or like logos' decisions to renew these contracts.
No, I think it won't, because you should assume that that's such an it's a rare thing. It's an inevitable thing, but it's very rare. And
But the fix is super.
yeah,
It's
but
super like annoying, right?
it shouldn't it shouldn't happen again, basically.
Well,
I think if it happened again, then yeah, for sure they're losing a lot of
right.
customers.
And I guess my question is when they will come up with like a statement or like some kind of gatekeeping process for these updates in the future.
I'm guessing it's going to be on earnings. I think they've been summoned to court, actually. I think they're summoned tomorrow. Or was that just one politician?
But do you like? I mean, obviously we were just assigning probability right now. But do you see whether there will be a scenario where um, ITs of these larger corporations just willing to try out other other brands, not CrowdStrike, and just because that this happened and it's hurting the company a lot, and then like they will not forgive them.
Yes, but I think the problem with that is that there's really only a few competitors that can do it at the scale that CrowdStrike can. Like it would be way more work to switch to one of their competitors. You'd have to be really motivated to do it. I think most of these people kind of depend on CrowdStrike more than the other way around.
Okay, but like, what are the other logos? Oh, sorry, not logos. So what are the other competitors?
Palo Alto
Okay.
have like a similar, maybe even a slightly larger portfolio of solutions, but really inconvenient to use them all together because they're all like separate. They're all separate software, and so
Okay.
they're trying to put them under one umbrella, and they're kind of doing it, but it's clunky. Sentinel-1 has like the core product is on par, potentially even a little better in some ways than CrowdStrike, but they just don't have the breadth of products, which means all these enterprises would have to go to a bunch of other vendors to solve those other problems. It would just be a lot of hassle at this point. It's like you've just had the most convenient solution, is the best quality basically on pretty much all the metrics out there as a platform, as a total thing. Yeah, it just isn't happening. The vendor consolidation theme is too strong, and CrowdStrike is the winner in vendor consolidation.
Okay.
I'm curious to know what Mo's take is on this, because
Yeah.
I mean, yeah, this is really not a hit to the quality of the product, which is how CrowdStrike has been winning. And they have invested by far the most into sales and marketing. So I see if they're getting sued, that might slow down. If they don't have that much cash to sales.
So what are some of the key dates ahead? Like, we have the Q4 renewal, like contract renewal. Like what are the other KPIs that or like the catalyst events that you'll be tracking?
Not sure. Besides earnings, I think they have a conference that they host once a year. I'm not sure what time of year that is.
And for the competitors, right? For the people who are still adapting to the system, they haven't bought CrowdStrike yet, but they are contemplating. Do you see the risk of,
Yes,
they switch? So those marginal buyers will be hearing these horror stories to be like, yeah, I'll just try out Palo Alto instead of CrowdStrike, right? Is that?
Yeah, I think that will happen, but I still don't think it's going to be that significant, because I mean the reason why this outage is so crazy is because CrowdStrike's like one of the biggest vendors.
Yeah, it's everywhere.
So if this had happened to Sentinel, you probably wouldn't have heard about it. There would be a few companies down, but not to the same scale at all. And the fact it hit the airlines is such a big optic blunder.
Yeah, I mean that's just all my question. I'm just trying to play devil's advocate here, and then
Yeah, sure.
yeah.
I mean,
it
definitely should be down from where it was before this, but I don't know how to measure that. Like, assume that they're going to get sued a lot, and that's going to slow down their cash. It's going to hit their margins short term, and potentially hit their sales and research short term.
What are some of the historical companies or historical breaches that we can take a look as engage? Like
I don't think it's comparable.
Or like or the Kaspersky?
Well, it's not a breach, because this is the point, right? It wasn't an era of cybersecurity itself. It was like a developer error.
Right. So maybe should we see whether any company had some kind of developer error, and see how that impacted the stock? I know it's not going to be super 100% comparable, but I would like to see whether the customer run away from that because they're like, okay, you offer a great product, but your management of product release is so bad. Or are people like, yeah, still a good product.
Okay. AWS in 2017.
Yeah, maybe we can check that out, see how it ends. But I feel like, yeah, I don't think I know enough to to comment on what the implication is, but you know what? Mo hasn't responded in 10 minutes. Shall we just end it there and then pick up tomorrow?
Yeah, fine with me. If we could get it
Yeah.
early tomorrow, it would be perfect.
Or like, yeah, get it early tomorrow, or I don't know whether Mo has any earnings on his end. But yeah, let's bring this conversation into the chats. And maybe it's easier for him. Because I guess audio might be too much for the bandwidth there.
Okay, nice.
Cool. Okay, let's call it a day, and let's talk about it in the chat. And I will see what the next step to do is, because I certainly need some help for the post earning drift, especially here, like hitting my case. So yeah, that's it, and talk to you tomorrow.
Nice. Have a
Yeah.
good one, guys.
Yeah. Cheers. Bye.
Bye bye. Bye bye.
Bye.